Welcome to the Accendo Traders Group. This is our video trade plan for Thursday, May 1st, 2008. AccendoTraders.com, effective trade plans delivered daily. And for our new folks, this is our routine that we go through each night to help prepare us for the next day. Make sure we're not having news affecting our trades and support resistance. And as always, we want to make sure that we have a light. Pause it here if this is new for you. And obviously today we've got the big thing. We had the FOMC cut the rates by 25 basis points. That's what the market was expecting. There was a little language, two things about the language. One thing was that they removed some language about downside risk. And in addition, they basically led, it to believe that this is it. We're going to stay at 2% here for a while. So, the market kind of went both ways with it. We were hoping that the release, the statement, would be the catalyst to move the market one way or the other, and it did. It moved it up, and then it moved it down. So you can see that we weren't down that much, but remember that we were higher and we closed lower. So I think we're still consolidating. We'll see. We don't really have a lot going on tomorrow. We have economic data. I'm just not sure if one of these is really going to project the market one way or the other. We've got jobless claims. There could be a little pull on that. The inflation numbers could be, maybe the personal spending. We'll see. We do have some earnings. A lot of oil companies. We have earnings afterwards, some of our favorites, PCU. So we'll see. We're still waiting to see which way the market's going to go. So let's start off with our flag list. Okay, so what we have here is the NASDAQ, and we talked about the fact that the NASDAQ is in sort of a consolidation range, and that today's down action fell right into that down range. Kind of broke the 5 here. We'll see what happens tomorrow. The other thing to note, here's the NASDAQ. You can see actually the volume increased a little bit on this down move. And obviously look at this. What does that wick tell you? That wick tells you that whatever momentum was there at the beginning of the day is gone. And we pushed the market lower. And that kind of goes with what I was saying, that even though we weren't down that much, we're down 11 here, 5 there. But when you look at the totality of the market was up and up nicely, and even our SP 500 was back in that 1400 range again, we were not able to hold that. And the biggest part of that was the FOMC. That's where the biggest down move went. But we were drifting lower a little bit after that. So let's take a look at that on the intraday. And you can see we started lower, and then the market moved higher and higher and higher. Great, great, great. We finally broke that 1400. And here's where it all went to naught. We came down higher, and then we closed, even as we try to rally to the 5 and the 10, we closed lower. So when you look at it, the market lost 1400 down, and the market lost 20 points there, just about 20 points. And the Dow, look at the Dow. The Dow lost, we're up here at 1300 really, if you go to the high of the day, down to, so that's down 180. So that does give us a little bit more impact on the down day and the push afterwards, after the FOMC minutes. So with that being said, when we look at our list, there's a couple things that we have to take in consideration. First of all, you guys know, take a look and see what we're keeping, just in case I don't get to it during our time together. But again, volume increase. Apple was up. Now we got a rising 3 type pattern here. So we can put our alert back at the open of today to see if we're going to get a continuation of the move. Certainly this was good retracement. After being up like this, we need a retracement. So we'll give it, we're not going to go straight bearish on this right now. It's still above the 5. So go with the open of today for your alert. ACI bounce where we thought about. And that's going to be the theme. You're going to see a lot of stocks bounce where we thought they would, or bounce at support. I won't say where we thought. So ACI is one of them, so I unflagged it. AKS bounce at support, 50 and the uptrend line. So I unflagged it. We'll see what happens. APA, even though it bounced at the support of the 20, which is good, I'm going to keep it the best thing for this is to bracket it. If it can get above today's high, let's go bullish. If it gets below these wicks, let's go bearish, running down to the 50. Looking at the indicators, you can see the indicators are going to be bearish on this one also. Baidu, same thing as Apple, but look at the indicators rolling over a little bit, but we can give it one more day for the rising 3 confirmation. So put your alert right around 375. Here's CHK. Bouncing off some support. This one just turned negative, so I'm going to say we're going to go ahead and continue to play this one. But because it bounced at the 20, that's where I'm going to put my alert. I'm going to put my alert around the 50. And you can see that matches with our rectangle from over here. So I'm going to keep my alert around $50 and see what happens for a bearish play. CLF, still hanging on, still trying to hang on, but it's in a consolidation pattern. I'm going to give this probably till Friday, and then I'm just going to unflag it. Remember, CLF is our 2-for-1 split play. CLP just moving along. La, 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 la. As long the volume's still good, moving higher. Let's check the indicators on this one. They should still all be angling up. You can see they actually were rolling over, and then now they're going back up. So this is actually a good play at the high of today. Put your alert around $87. DVN. We have a lot of energy stocks coming out, and DVN might have earnings today, yesterday. A couple more energy stocks, but look at that doji right at the 20. Look at that doji right at the 20, and the buyers actually brought this one back, so it was falling. So this one can go either way. It can go either way. You could bracket trade it. I'm going to unflag it right now because it can go either way. FCX bouncing at the 20. It could go either way. I'm going to unflag it. Goldman Sachs hanging on there. I'm not sure if I'm ready to go bullish. We've been waiting for it to break the 200. Hasn't done it yet. Now the 200 is close. So I'm going to unflag it right now because I want to see Goldman Sachs get above the 200. MTL, falling 3 pattern. Indicators are weak. Oil, falling 3 pattern. Indicators are weak. We did get a little on RSI. PCU has earnings tomorrow, so I'm going to unflag it. POT. Also look at PCU at the 200. POT has some more room to run, but so put your alert at the bottom of these wicks. I'm flagging RIM on the day that it had, unflagging Sears Holding on the day that it had. And WLT is still moving along, It might also have earnings also, so check on that. Okay, so now we're ready to move on to our educational portion of our video, and we're using the book Trading in a Zone by Mark Douglas to shift to mental analysis, the first section. And yesterday we basically talked about fear. It's been one of our recurring themes because it's something that we have to get over in order to be successful in the market. And again, by now you guys know that I believe having a system in place, having a trade plan in place, is one way to take the emotion out of trading and to make that fear go away. Because again, it's your system that's working. It's not you mentally going against the market. And what Mark Douglas says is that 95% of the trading errors that you're likely to make stem from your attitudes about being wrong, about your attitudes about being in the wrong place at the wrong time, your attitudes about losing money, or your attitudes of leaving money on the table. Again, and this is what we said also 2 days ago, who hasn't been in that situation? We all have. We all have saw profit and decided to take it. We all thought stock was going to tank, and it didn't. We all knew we should have got out of a stock. The indicators told us to get out, but our stubbornness said it's going to come back of us. We've all been there. And what we've been trying to do over this period of time is talk about, so what do we do? How do we overcome that fear? He goes on to say that your fears will kind of change your perception of the market. Not only does that market become a place of pain, but it also affects how you read the data. Remember, the market is just data; it's just movement, and your fear can, it's almost like alcohol, where it can alter your perception of what you're seeing, and it can cause you to do things out of fear, out of emotion, instead of letting your system or your trade plan work for you. So again, we know that our theme here is that trade plans help you by developing a system of indicators, of signals, of patterns that you're looking for. And when you see those things, you let your system work for you, and you don't let your emotions work for you. As always, to get the full version, there's the podcast link. Please continue to send feedback. I greatly appreciate that. And there's my blog where we're talking more about trade plans and how to develop your own. And as always, trade your own risk. I will talk to you guys tomorrow.